So guys, I'm currently doing about 270 bucks per day off of just 2 positions that I'm in that make up for a good chunk of my portfolio, roughly half of my overall income generating portfolio. And then I have another $100,000 or so invested just in cryptocurrency hodls. But through DeFi, I'm able to take this $270 per day that I'm generating and throw that back into hodl assets like Bitcoin, like Ethereum, Link, Render. And then I can then go and leverage those assets on lending and borrowing platforms, inject more into DeFi, or I could just leverage those assets up and gain more exposure to them. That's something that I've been doing with Aave as well as Bitcoin and Ethereum and just a ton of other assets for a couple months now. One of these strategies that I was actually running was Link, where I was generating a couple $1,000s off of an Ethereum to Link liquidity position. I believe it was about $2,500 at the time. And I just converted everything into Link. And I put that up over here on Aave, took a $1,000 borrow against that Link, and then bought up more Link basically. So I basically had about 1.5x leverage on this position. And then when Link went up to $25 or so, well, guess what? I profited immensely. My cost basis on this, about $3,500, but I have 7.6K. And again, $1,000 in profit or so is because I use that leverage. So I'm already up double on this borrow that I'm over here. And guess how much I paid to get exposure to that $1,000? That was $9. $9 so far to get exposure to $1,000 of profit, basically. I guess doing the math, about 990 bucks of profit. Anyways, that's just something that my DeFi passive income portfolio allows me to do. It allows me to have opportunities like that in my portfolio. With that being said, I want to talk about volatility today because I want you to look at this number right here. Take a good look at it, right? Currently down about 5.15% on these positions right now. Not too bad, right? The market is crashing today. Bitcoin is down 2.8%. Ethereum, which is the backbone of the portfolio, down 6.3%. If we were to dive into some of these other assets, I have Aave in this portfolio, and then I also have Aether token in this portfolio. Aether is down 8.8% today, and Aave is down 6.5% today. I'm not fretting. I'm not scared. I'm not worried or anything like that because the entire market's down. It's volatility. This volatility right here is good. As long as this number right here is green and I'm beating holding the market, I'm completely happy. And the reason why is because this tells me, hey, if I stuck my money in Ethereum or stuck my money in Aether, in this instance, I would actually have less money than I do in the liquidity pool. The reason why is because I'm generating fees. I have income because other people are trading. I'm not trading. I'm not selling. And yes, I am doing a little bit of buying, but at the same time, all the fees from trading activity within these liquidity pools are coming right to my portfolio, generating me a cumulative APR of 260% right now, which is $270 per day. Guys, this is real data. This is not projections. This is based off of the time that I've been in these pools. Now, granted, I have been in these pools for about a day to a day and a half. So this is only factoring in the volatile data. But with that being said, these APRs will still even out to roughly 150%. But on my Ethereum to Aether pool, 338% APR. This is doing 216 bucks per day, and I have about $23,000 in here. And I am going to show you the broader strategy in just a second, but I want to put these numbers in perspective, basically. $216 per day is $1,500 every single week, which is $6,500 every single 30 days. Or if you're to look at the yearly income of this position, that is $80,000 off of this yield generation position. Guys, you do not see these returns in any other markets. And as promised, I was going to show you the broader strategy here. Even though this recent position was down 1,600 bucks, I had 2 previous positions that profited 6.1K and 6.5K, both from price appreciation and $6,000 in earnings over the time span I've been in this position. And on average, this position is doing about a 200% APR for me. Now, I know what a lot of people are going to say is, well, Jake, it's on the Ethereum network. And yes, it is on the Ethereum network. And yes, I did pay roughly a $23 gas fee to get into this position. And I will pay another probably 100 bucks or so in gas fees throughout the lifespan of this position. But when you are generating $216 per day from a single position, and that same position, the same range, is doing, say, 150 bucks per day on the Arbitrum network, guys, it is much, much, much better to spend the additional money to be on the Ethereum network. And guys, the Ethereum network is also more consistent with its returns because there's institutional trading activity, and it's the main deployment network for a lot of the different cryptocurrency assets out there. So I hate to say it, but don't be cheap because you get what you pay for when you use these other chains. If you've used anything like the Solana network or the Arbitrum network or just any other network, even Base, right? They're super cheap, they're super great, but you might dive into the pool. One day you're getting 150% APR, the next day you're getting like 20% APR and then 25% APR because liquidity is constantly being added and removed and trades are constantly going up and down in terms of overall volume. Whereas something like this, Aether, doing a consistent 200% APR and consistently generating me income, I am completely happy with those numbers right there. And guys, these are the types of positions that we're going to help you find within our DeFi Excel program. So if you you guys are interested in joining the best DeFi community out there that provides you with the same exact tracking software that I'm using right here, then make sure to check out DeFi Excel. Join that community if it's a good fit for you. If you think so, it's going to be linked right below this video. Anyways, I do want to dive into the overall Aave strategy. So taking a look at this overall Aave strategy, this one hasn't done as good, but I have a $556 profit versus HODL right here. I have negative 1,000 bucks over here. This one hit me hard when Aave did really well, but there's a strategy behind this as well. And the strategy was using previous Aave income and previous income from just other assets to actually buy up more Aave token basically. And by holding that Aave token accumulated from the liquidity pools, when that Aave token appreciates, that kind of combats this divergence loss that was in this position as well. So it's not completely sunk. And then this one over here is profiting about 980 versus HODL. Once again, not bad whatsoever. Again, this strategy is up $6.3 thousand, nearly 1,700 bucks of that is from income, and the other 4,600 bucks of that is from just the assets appreciating. Once again, not the perfect strategy because of course it's not at the ratio that I would like it to be for versus HODL, as well as overall divergence loss. This strategy is leaking a little bit, which is something that we teach in DeFi Legacy, but I'm still pretty damn happy to be doing 110% APR on average throughout Aave, especially once volatility slows down and this position just continuously generates me money. And guys, the last thing I want to go ahead and do is tell you what I actually do with that income. As mentioned, I can take that income and go and throw it over on lending and borrowing platforms. Sometimes I do that with specific assets when I see good buying opportunities. For the most part, I park them in stablecoins, wait for opportunities like we see today in the market, and then I deploy that capital into HODLs, or sometimes if I have a big bag of capital on the side and I want to build up my liquidity pool positions, then I'll go ahead and open up a new liquidity pool. And that is once again generating me more income. And this is exactly what I call creating your DeFi flywheel, because your whole entire portfolio should complement itself. You should be building a portfolio, not positions, not strategies. You should be building a portfolio that has multiple strategies, multiple positions, and multiple assets within it basically. And that's what we do over here at Builder Wealth. We build portfolios, we leverage when it's safe to leverage, and of course we generate income to complement the entire portfolio. It's like investing into the stock market where you're generating 10 to 15% in growth, just assets rising, companies going up in value every single year, and that's getting compounded. And then of course you're generating maybe 2 to 3% in dividends, except the difference here is you're generating substantially higher growth returns because it's cryptocurrency. These assets are much more volatile as we saw today, but at the same exact time, you're also generating substantially more income, 200% APR right now. And again, I am going to be completely transparent with you. Across these two positions, this will die down to about a 140, 150% APR, but still over 10% per month from these two positions right here, which I personally believe are absolutely amazing positions and well worth the risk that I am taking. I am pretty damn happy with that. Guys, don't use this as an opportunity to copy what I'm doing or just ape into the positions that I'm currently in, because that's a stupid strategy in all honesty. If you guys do want to actually get started building out your DeFi portfolio, let me teach you exactly how to do that through DeFi Excel. It's going to be linked right below this video. There's a short little video on a little website that you guys can check out, tell you everything you need to know about DeFi Excel, and then from there you can decide if you want to join up. I'll see you guys in the next one, and peace out.